So today we're going to be talking about seller credits, what they are, what they're used for in this mortgage world, and how you as a buyer can utilize them to benefit yourself. So first we're going to talk about what a seller credit is. A seller credit is going to be an actual credit in money that you get from the seller in order to utilize towards your loan. So basically it can be used to buy down rate, it can be used for your closing costs, and many other things as well. So we're gonna dive deep into the three main things that it would be used for in your loan. So number one would be a temporary buy down. So we have lots of different options for these, but the most common is gonna be our 2-1 buy down. And basically what this is it's going to buy your interest rate down for the first year by 2% and the second year by 1%. And then year 3 through 30, your mortgage rate will be the note rate that it is today currently, and it won't ever change after that unless you refinance or alter your loan in some way. So what that means is you're going to get a credit from the seller in money. That money is going to be put in a little account, and what that does for you is it buys down that interest rate by 2%. In turn, making that monthly payment for that first year significantly lower. On average, I would say around $500 to $900, depending on the loan amount, is how much you're gonna save in monthly on doing that option. That second year, you're gonna go down by 1% from the current rate. And that probably typically saves people on average, I would say like $400 to $300 a month, depending on their loan amount. So as you can see, this credit is super beneficial for you as a buyer because it can help with that monthly mortgage payment and lowering it, making it a lot more feasible. Also just reducing that sticker shock and maybe going from a smaller payment to a larger payment. So that's kind of how that program works. And then we also have a 3-2-1, which is a similar situation that you could use if you were trying to do a temporary buy down with a seller credit. The next thing you could use a seller credit for is a permanent buy down. And so what that is going to mean is you are permanently buying down the rate for the full 30-year term that you're in that loan. Meaning that if the current rate today was 7.5 and you wanted to buy that down to 6.5, whatever that amount of money is that would take to buy down that rate by 1%, that is what you would request from the seller, and that you would utilize to then reprieve your monthly payment and make it lower. And then the third thing that we can use seller credit for is closing costs. So when you do a loan, obviously you know when you're financing a home, you have your down payment and you have your closing costs. Closing costs are going to be all the fees used in order to actually finance something. And so what we do is typically those are around 2.5% to 3% of the purchase price of the home. So we say, hey, seller, we're going to need, a 3% credit, and we're going to use that towards all of our closing costs. So then that means as a buyer, your only responsibility really is going to be that down payment and bringing that in and not having to worry about those closing costs being paid. So seller concessions or credits can be used in so many different ways, and they are so amazing. And what's nice is that this current market, it is something that people are actually getting a lot, and it does help with that, liquid on-hand cash money that you might need in order to finance a property right now. So if you found this information helpful and you're looking for more information like this in the future, make sure to reach out to us or just go ahead and like and subscribe.